In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization, a non-profit organization, that non-profit or not-for-profit being a private college. In prior presentations, we've entered transactions into our general journal and then posted them to our trial balance worksheet. We then did the closing entries, and then we did the financial statement. The first financial statement that we have constructed would be the statement of financial position. This time we will be constructing the statement of activities, the statement that shows performance, the statement that's going to be similar to an income statement. So the statement of activities then will be dealing with these dark blue accounts down below. So a couple things to note as we go through this. Remember that if you're talking about like a book problem that asks you a specific question of which of these should you create first, the balance sheet like account, the statement of financial positions, or the statement of activities, the correct answer will typically be the statement of activities. However, in practice, I tend to think that the balance sheet is nicer to do, so we did that first. We did the balance sheet first. Why? Because that allows us to put something in balance. Now that this is in balance, we feel pretty good about half of what we've done here. We don't have to wait till the last kind of thing that we do to see if the whole thing works. We already know it works. Now we just need to see that we can break out these amounts into more detail, that more detail being the temporary accounts, those temporary accounts being the statement of activities. So now we're going to be moving down to the statement of activities and entering these transactions or entering of these accounts into them. We're going to be finding a home for all of these dark blue numbers. Note that we already found a home for them in here, but they were all grouped together as one kind of line item number. If we highlight all of these, in other words, adds up to 342,857, which is this 342,857, which we did find a home for, but we now want to break it out and find their own home in the statement of activities. The statement of activities is a little bit different than the statement of activities in a for-profit in that we have multiple columns. One column with the without donor restrictions, another column with donor restrictions, and then we total those up. So that's going to be the new item over here in the trial balance. We've just been recording these transactions in accounts labeled with and without restrictions, but it kind of makes more sense now. It pulls things together. It's easier on the eyes for an observer or a reader of financial statements of this data if we break them out by column. So this activity of recording or making the statement of activities can be a good one to get a grasp of this. So we're going to start off with the revenue as we would with a for-profit type of organization. So we got the revenue and the gains. We're going to pick up. So we'll start off with the student tuition and fees. Now note that if you look up top, student tuition and fees is going to be broken out, of course, between without donor restrictions and it could have with donor restrictions. We actually don't have one with donor restrictions here, but we're not going to be putting the with and without donor restrictions on this side because we will be breaking them out by column. So in essence, this is going to be in student tuition and fees without donor restrictions, student tuition and fees with donor restrictions, and then the total. So we're going to pick up this item here that does not have the restrictions. It's a negative number up here. We want a positive number in our statement of activities, and therefore we will flip the sign by starting with a negative of that 234,307. There's nothing in this one, so that's going to be a 0, and then we're going to sum up these two. So that's where we're going to start off. And next, we're going to go to the contributions. So we're going to do the same with contributions. We're looking at those revenue type of items, the one that have credit balances over here. And we found a home for this item. Now, also note that the next line item is tuition and fees. This is going to be kind of like a contra revenue account. So we'll actually record this. Let's actually record this in the student fees, tuition and fees. So I'm going to actually make this net. We'll record this net and then add that one to it. So let's go into here and then I'm going to say, let's say minus this number. So it should be that, or we could do it this way. I could use our sum function equals the sum of these two. So this one minus this one, I'm going to sum them up. It will then subtract because this is a credit and that's a debit. And then we want to flip the sign. So I'm going to double click on it and put a negative in front of the sum. And so it looks like that, the 212, 537. Now I'm going to put a little yellow dot next to it to say that we have then found a home for that one, and I'll indicate that one with those little yellow dots. Now we're going to look for the contributions. We have contributions down below. It's going to be a credit balance as well. We have one that does not have restrictions and then two that do. These two that do, we're going to group together in the one column with donor restrictions. So the one without, we're going to start in V29 and say negative of this number. So that's the without restrictions, that number. And then this one, I'm going to say negative sum and add up the other two. Negative sum of, and then we're going to add up the two with restrictions, this one, and enter. And then we'll sum them up. We'll say equals the sum of those two. So there we have that. All right, so then let's put a good old yellow dot next to those three. We found a home for them. We could feel good about that. They're warm and cozy, and they're not all crowded up here in the net assets, and that's their only home. So now we're going to go to the investment income. So investment income is going to be the next item. It will have a credit as well, investment income with donor restrictions, and we have without and with donor restrictions. So this is the one without. We're going to put that in the first column, which also says without. So they kind of match up there. And then we're going to scroll up and pick up that 1,900. And the one with is going to be right down below it. It's negative of the 2,270 and enter. So now we found a home for those two. I'll make them yellow, put the yellow dot in there indicating our good job, and then we're going to say equals the sum of these two, adding those up to the 4,170. All right, next one we're going to have the unrealized gain. So we have unrealized gain. That's going to be down below in our income kind of numbers. So we have unrealized gain on investment without restrictions, and then two with restrictions, one with regard to scholarships, the other endowments. Okay, so then we're just going to pick that up in cell V31. I'm going to say negative of that 2,070, and then we're going to say negative sum of the other two, picking up the other two. So we're going to say negative sum of the other two, picking them up for 2,840. We have now found a home for these three. So we're moving along. We're doing good. Everything's rolling. And then we're going to sum these up in the outer column, summing those up for that 4,910. Next, we're going to take a look at the net assets. So these are those funny two accounts, those strange two accounts, those new kind of accounts we have to deal with a nonprofit organization compared to a for-profit organization. That's going to be these two. So net assets released, satisfaction of purpose restriction without donor restrictions, same thing with donor restrictions. Now, obviously here we have without and with, so you can kind of line up which one should go into each account. However, one of these is going to be negative over here, and they have a debit and credit on this side, so that can be a little confusing. Again, I would think about these as kind of like income statement accounts. So the one without donor restrictions is going up, because that's the point of these two accounts. Something that was restricted is now going out of restriction. Therefore, the one without a restriction is going up. It has a credit balance because you can think of it kind of like an income statement account, and therefore is going up with a credit. However, so it's a negative number for us as a credit. However, over here, we want it to be a positive number because it's representing in a plus and minus format as it going up. So over here, I'm going to say negative of the credit number on this side. And then this one is going to be with restrictions. It has a debit amount that represents it kind of going down. The restricted items are going down. You can think of them, again, as having credit balances. That credit balance is decreasing or kind of going down. Over here, however, we want to represent that decrease with a negative number. So on this side, we're going to take that and flip the sign again. We're going to say negative of that number and enter. Then we'll sum this up equals the sum of these two. So we sum them up, and that is that. And I'm going to go ahead and underline this numbers or these numbers. So then we'll total these up, and the total is going to be the total revenue and gains. Total revenue and gains, we're going to sum this up using our trusty sum function. So we're going to say equals the sum of trusty sum, these items, Then we're going to autofill that across. So I'm going to select that one and autofill across, picking them up across. Okay, so the next thing we're going to do is we're going to, and also note that I put a yellow dot if I did that without telling you. We put a yellow dot here net to the net assets, finding a home for those two accounts. All right, now we're going to move on to the expenses. So we're going to have another subcategory called expenses and losses, and even a third subcategory within the expenses and losses, that being education and general expenses. So within education and general expenses, we will then be picking up, scrolling back up, the education and general expenses of the institution expense is going to be one, and that these are all going to be without restrictions. The expenses, no restrictions. So I'm going to pick up that 122,452. The next one is going to be equal to, and we're going to go to the academic support expenses. Academic support expenses is going to be equal to academic support of the 31,518. Next, we're going to be picking up the student services expenses. Student services expenses in V38 will be equal to, scrolling up to the student services expenses, enter. Next, we will see that we have the institutional support expense, and that is going to be equal to the institutional support expense of the 28,710. Okay, so now we found a home for those. So I'm going to highlight those or select those, right click on them. If I can do so, it won't let me. And then I'm going to make it yellow. We found a home for them. Okay, so then we're going to sum up this way, equals the sum of these, and we're going to autofill down, doing the same thing on this side, like so. Like so. And then we're going to total this up, and that's going to give us the total expenses and losses. We're going to pull out the trusty sum function with an equals SUM. That's not a U, that's an I. SUM of these. And then we can autofill that across, which it already did for us. The middle is 0. I can autofill it to the 0, just to show that 0. And the next line item is going to be the total change in net assets. This is like the net income number. It's always been kind of, it can be kind of confusing. It's not a very intuitive number until you kind of think about it. Obviously, the changes in the net assets is the same as a for-profit organization. The net assets being these numbers. The change in the net assets is, of course, what we would think of as kind of like the net income. All the activity, all this stuff is the change in the net assets, as we can see in the closing entries down here, right? All these transactions down here, we closed out. That adds up to kind of the net income of the 4,448, and that's what we closed out to here, the 4,448. So in essence, net income can be thought of as the change in a corporation of basically the retained earnings, unless there's other things going on like dividends, or it can be thought of as the change in like the capital account for a sole proprietor, unless there's other things going on like draws. And so here, that's why we call it the change in net assets, or my interpretation of why it may be called that. So we're going to say this minus the 220,470. That's going to give us the 6,007. And then we'll sum this across this way. And so there we have that. Now that's kind of like the bottom line number of what would be kind of similar to the income statement and the statement of activities. But now we're going to tie this out to the net assets section. So we got to tie this out to the net assets now. So we're going to then have net assets beginning balance. Now this is the same thing we would do for a for-profit type of organization. If we wanted to tie something like this out, you'll recall that these two net asset accounts are similar to something like retained earnings in a for-profit organization, or a capital account in a partnership or a sole proprietor, in that these are the accounts that start out as what they are, and then the accounts that we close out into. And so typically then, even more so for a not-for-profit than in a for-profit, which may be adjusted for something like something like investments, these two accounts don't typically have activity to them. So in our trial balance, these, although they're kind of like on the ending trial balance, are really the beginning numbers because there hasn't been any activity to them until we close out. the temporary accounts, the income statement type accounts, the statement of activities in our case, type of accounts. So these two accounts are going to be the beginning numbers, the one, of course, without restrictions, the other with restrictions. We're going to pick up those beginning numbers. All right, so here we're in the column in the donors with donor restrictions, with restrictions, or this is without restrictions. In cell V42, their credit balances, we need to flip the sign. So we're going to say negative, and then scroll back up and pick up the 401 or the 1042, and then in W42, this is the one with restrictions. So we're going to say negative of, scroll back up, and we'll pick up the second one, the 234, 209, and then we'll sum up in the outer column those two. Then the final number that we will have here, or the final row we're going to have, because there's three numbers that will be involved in it, are going to be the net assets at the end of the year. So we're going to sum up then, pulling out the trusty sum function one more time. And we've got these two, the total net assets and the change plus the beginning net assets gives us the ending net assets. If we sum those across, doing that across for the without, the with, and then the total, we get to this amount. That, of course, it should be equivalent. If we add these two up, 342,857, 342,857, then we're done with the two major financial statements, those being the statement of financial position and the statement of activities. If we want to check these two, of course, the major checks we do, this number ties out to, which is the total assets, ties out to total liabilities and net assets, and we can tie out the total net position as well as the with and without restrictions, because we broke those out or tied out the income statement like account or like statement, the statement of activities, to it. So this is the bottom line number, remember, of the activity that happens, the income statement, kind of like the net income number. But then we tied it out to basically what would be similar to the balance sheet type of account, of type of report, these three numbers. So the 110,207, the 232,650, and the 342,857 then should tie out up here, where we have the 110,207 to the 232,650, and then the sum of those two being the 342,857. Now you might want to tie these out kind of physically within Excel just to double check that you're in balance, so that you can kind of check everything with just these two numbers by saying this equals and then tying it out to the statement of activities. It should be equal to this number, and this is going to be equal to this number. And then if you do that, you physically kind of tied them out in the statement. This adds them up, and then all you kind of really need to check for sure, for a quick check at least, would be that the balance sheet is in balance. Total assets are equal to liabilities and the net assets.